Geodrill is a leading drilling services firm focused on Africa and on growth in new markets. We've got CEO Dave Harper here to tell us about the most recent quarter and how 2024 is shaping up to be a very strong year. I'm Martin Gagel with Market Radius Research. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Dave, great to have you back. It's been a while. You just posted your Q1 results, which were decent, a solid quarter after a few hiccups in the prior quarters. And I would love an update on how things are going and what investors should be expecting for the remainder of the year.
Thanks for having me back, Martin. So as you pointed out, we've just put out a quarter one. It's a return to profitability. It's a return to respectable numbers, which is good. To state the obvious, we had a couple of underwhelming quarters in 2023, and that was really drilling as a cyclical business. And as a cyclical business, things do go up, things do go down. We came to the end of a really solid run, a 3-year run, which took us from 80 million in revenue into the hundreds. I think we ended up summiting around 138. And in 2023, we came over the top of that summit. And as that happened, we took that opportunity to exit a couple of problematic countries and realign our business and also realign our customer demographic. We've done a lot of good work from moving from customers beholden to the capital markets, so they were capital constrained, and to working largely now for senior tier one miners, cash producing tier one mines, and that almost alleviates completely our problems that we were plagued with during 2023, where we had to take some provisions on some collections. And at the same time, we've recently hit a purple patch during the bidding season and picked up some fairly significant contracts. We've actually just signed $150 million across a number of names, across a number of countries. And the big difference being that we've moved away from those junior explorers and more focusing on the senior miners. And I guess the first green shoots that we're seeing of this was the quarter one that we've just announced a couple of weeks ago, which as you pointed out was a decent quarter. With when we compare it to quarter one on a year-over-year basis, it was an 8% decline. But then considering that quarter one 2023 a year ago was a second to our record quarter, that was actually a fairly good result. We're also, for the first time in a couple of quarters, returned to profitability, which was good. So we see it very much as it was an improving quarter, but the real results will follow, and you will see those when the results eventually filter through in November from what is the current quarter, which is quarter two. And top of mind right at this point in time is to get back to the best work that we were doing in 2022 so that we can continue our otherwise previously unblemished growth trajectory and get back to the best times of 2022 and take off from there. So that's basically where we've been busy for the last couple of quarters, basically just realigning the business, changing the customer demographic, moving away from some problematic countries, also away from some problematic payers, and just getting things reset for what is effectively the next phase of growth, which we can certainly look forward to.
Gold prices and copper prices are at very strong levels, to say the least. And while those indirectly often help the juniors who are doing the exploration work, if the capital markets aren't turned on, they don't get to fund their drilling. And so just to make sure that everyone understands how the seniors drill or production companies drill, is when commodity prices are high, they want to mine as much as possible and sort of participate in the good times. So they do drilling ahead of where they're actually mining to know exactly how to mine, and they're kind of hitting the gas pedal, and then that's where they're using you. So that's how these high commodity prices are impacting your strength and your growth here, right?
Absolutely. The mining, commodity prices are as strong as they've ever been. Gold's nearing $2,400 an ounce. Copper's, I don't know, 2,000 a ton or something, whatever it is. 12,000 a ton, is it? It's like some ridiculous.
It's strong. I
it's really, really strong. And
yes,
it's and when this occurs, the mining companies are basically pedal to the metal, and as they mine the resources, they have to replace the resources, and so that requires drilling. All mines require drilling, and so that's why we're extremely busy at the moment. I know that the numbers for the last couple of quarters wouldn't reflect that, but you need to understand there's been a major realigning program that's been going on here. As I say, the first green shoots we've just seen. But from here, it's blue skies ahead, yeah.
So do you have good visibility on, let's say, the remainder of the year with contract wins and where you know you're going to be placing your drills?
I do. I've just walked out of the control room. I'm looking at our rig utilization of the total fleet at 75% at the moment. That's record high for us. And that's only a large fleet. That's the other thing that's happened during this last couple of quarters. In the most recent quarter, we've actually just made an acquisition where we've increased the size of the fleet to handle the recent contracts that we've just signed and secured. And of the enlarged fleet, we're now talking 75% utilization. That's probably the strongest utilization of any drilling company, I would think, in the world today.
So you exited some, call it geopolitically volatile markets. Where are your drills now focused on? Should investors be concerned about could this happen to any of your other countries? Are the countries you're operating in relatively stable and with good governance?
That's a great question. Africa is a continent that's made up of 54 countries, and at any one point in time, you can imagine that one of those countries might be blotting their copybook. The thing that we've always been protected by is the fact that we never put all our eggs in one basket. And so if we look at the country that we just exited, it happened to be our strongest market. In 2012, it was actually our strongest market. And things deteriorated, and we just took a decision that it was no longer our cup of tea. So we've managed to move out of what was once our strongest market. And it's, we've come out of it relatively unscathed, I do believe. That work and those groups have been repositioned into other countries, and they're now fully engaged. So moving a rig out of a country and relocating and winding down an operation and getting things all started again, it's normally, catastrophic to a business. For us, I think we've come through it relatively well.
Besides West Africa, you also operate in Egypt, which is a relatively new market you entered, and then as well South America, which is an even newer market. Can you give us an update on how business is going in those areas?
Egypt's going very well. We're expanding in Egypt, and things are going well. We really like Egypt. We're loving South America at the moment. We're busy in Chile. We're busy in Peru. And the names that we're signing up, the tier one biggest miners, I can't mention names, but, basically the big guys. So we're really, copper's very strong at the moment. We're drilling mainly for copper. So we're really enjoying South America at the moment. West Africa continues to be our key markets. We operate in Ghana and Ivory Coast. We really have had a great history, and we still continue to enjoy operating in Ghana, Ivory Coast, Mali, and we recently expanded into Senegal, which we're enjoying very much as well. So, yeah, out of Burkina Faso, Mali, we're reducing our focus there and basically just realigning rigs elsewhere.
Okay, so it looks like you're set up well. You've got a backlog. You've got, what, 89 rigs, because you just acquired some, and those are operating at a 75% capacity utilization. So you've got tons of drills drilling. And so investors should be looking for a strong 2024. But you haven't mentioned any specific guidance. Are you laying off the sort of guidance range for this point, but just saying that
we never actually give guidance per se, but I'm happy to tell you at this point in time, my immediate short-term goal is to get back to the best times of 2022. If we can get back to being flat with 2022, then I would tell you from there we'll put on some growth, and we'll continue this. We've got visibility out now for the next 3 to 4 years, and I imagine we would continue to just put on growth as we have since inception. If you consider we started this company 25 years ago with 1 rig and 1 contract, and here we are today with almost 90 rigs. And that is a 100% organic growth story. So we'll just keep growing. We'll keep adding rigs. We'll keep growing the revenues. We'll keep just adding to the margin. And with eventually at one point in time, I guess the problem will be where do we stop growing, and at what point do we stop adding rigs and just return special dividends to the shareholders. And that times are coming.
Okay.
Soon.
All right. Excellent. Dave, well, with that, I think we covered all the main bases. Any final words you want to say before we wrap it up?
No, that's it.
Okay. Dave, great seeing you. Great catching up. Look forward to seeing the business progress after you finish a challenging transition year. Thank you.
Good. Thanks, man. Cheers.